Well, I'm delighted to be joined by our next guest. He co-founded the Quantum Fund and retired at the age of 37. Since then, he served as sometime professor of finance at Columbia University's Business School and as a media commentator worldwide. He's the author of Hot Commodities, Adventure Capitalist and Investment Biker. His latest book, A Bull in China, is out now. He is Jim Rogers. Jim, we're thrilled to have you today. Thank you very much for joining us.
Charles, it's my pleasure. I'm delighted.
We're going to be chatting a lot about your book, which is out now, A Bull in China. But before we get on to that, it's a very unique situation in the markets at the moment. We haven't seen anything like it for a while. What's your take on what's going on, re the credit crunch and the US? Is it dipping into recession or not?
Well, the U.S. is certainly in recession. The government says it's not, but governments always lie about this kind of thing. We know that housing is in worse than recession in America. We know that automobiles are. We know that machinery is. We know that many parts of the financial community are in worse than recession. I'd like for the government to tell us all what is so strong that it's offsetting many parts of the American economy which are basically in free fall, in collapse. And just to demonstrate, if the government really thinks we're not in recession, why are they cutting interest rates by, they've cut 3 times now. They say they're going to cut more, and the executive branch is rolling out programs to revive the economy. I mean, their actions speak louder than words.
Given the state of the U.S. economy, are you surprised at how well the U.S. indices have held up, at least so far?
Well, yes, the U.S. market is down, say, 10 or 12%. Since the top. We should put it this way. The averages are, Giles, if you really look underneath, many stocks are down. What's happening is because many big companies haven't gone down as much, they're distorting the averages. Underneath, there's a lot of weakness in the stock market.
Where do you see it going now, and what would you do if you were an investor in America?
Well, I would not own U.S. dollars. I would not own U.S. shares. Most shares in America, if I'm right, the bear market's going to continue at least for a year or so, and the U.S. dollar is a terribly flawed currency. I don't want to own the U.S. dollar. I have been moving my assets out of U.S. dollars, and I plan to, during the course of this year, to hopefully get the rest of my assets out of U.S. dollars. It's a terribly flawed currency. America's not a great place to invest anymore.